You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, chatting today with my friend Nick Santiago from MiningStockEducation.com. We talk to Nick and get a trader's perspective on the markets once a month. So Nick, welcome back onto the show. There's a lot of jibber jabber in the news about the debt ceiling. And honestly, I just tune this out because I've gone through a number of political cycles now, being in my 40s, and they talk it up and then it's resolved and then things just tick on as normal. You know, what is your take on this? Should we be making something of this as investors and traders?
I don't think you make too much about it. I think your assumption is correct. They've raised the debt ceiling, I think, 74 or 78 times since 1917. So, they're going to do it again. I don't even know why they call it a debt ceiling. They should just call it a debt raising, because that's really what they do. This one might have, because there's so much political turmoil going on, this one may go down to the wire, or even the government may even default for a few days or a week or so. I wouldn't rule that out. They'll shut down some national parks. So, we may see something along those lines. If they want to play real hardball, maybe they won't, pay some debt or something along those lines. I wouldn't rule anything out because this world is chaotic. I think the politicians are all pro wrestlers. I don't believe in any of them. And I think the whole thing is just, another dog and pony show that we're having to put up with. And as traders, I think traders are over it. They know that there can be some implications that are negative. But for the most part, I think the market really just cares about, is there liquidity in the system to push it up? And we got a banking crisis. And yes, there is liquidity in the system.
How does this affect U.S. Treasuries at all? Is there any near-term trade around this?
Treasury market has been so, if you look at yields, which is really how I track treasuries, a lot of people will look at the bond prices, and when yields go up, bond prices go down. When yields go down, bond prices go up. I think we're just going to be real choppy for a while. I don't see yields really plunging or going lower. They could have, some sharp declines on certain days, but then they're going to move back up. I mean, we have a lot going on out here in this world. As you know, there's a lot of inflationary pressures, even though they keep telling us that inflation is going down. Inflation really doesn't fall much when you have proxy wars going on, right? So we have this Russia-Ukraine war. You have a war in Sudan, which is another proxy war between Russia and the United States, believe it or not. And if you get Chinese-Taiwanese conflict, that just creates even more, conflict and war, and that's inflationary. And then you throw in some derailments and supply disruptions, that's inflationary. So inflation is not going down like they're telling us it's going to plunge, and that's not happening. And yields aren't going down very much either. So, just watch for yields to stay in somewhat of a range, and that goes for all of them. And keep a close eye on the 2-year Treasury note yield, because if the 2-year Treasury note yield starts to get close to the Fed funds rate, I believe right now it's around 4.25%. Fed funds rate's around 5%. If that 2-year gets up there, the Fed's way behind the curve and they're going to need to raise rates. So, everybody kind of has this story a little bit backwards.
Are you anticipating the Fed, though, to pivot this year, or are you expecting them to raise throughout the year?
I don't know if they're going to raise much from here. They're probably going to pause right now, but I don't see a cut at all. And I don't even think they can cut. So I don't expect a cut, but I think they're probably going to pause here. The market has been excited about that. But believe it or not, what's making the market go up is liquidity from the central banks. So if you look at the March 13 pivot low in the S&P 500, the markets, that's when the banking problems really came to light for a lot of us because of the inverted yield curve. And what happened? The Fed opened up a special discount window for the banks. And then they did a special program with the other central banks to provide liquidity. So what we're seeing is liquidity in the system, even though it's not being called quantitative easing. That's really the essence of why, we see the small concentration of technology stocks moving up. The Apple, Amazons, Googles, Oracle, Meta, and Microsoft. That's really the bulk, and NVIDIA. That's really the bulk of the move. I mean, they're outside of that. there's really nothing really moving. We're just in a choppy sideways range for roughly 6 weeks.
With NVIDIA, don't they have a PE ratio of like 160 or something crazy like that, Nick?
Oh, it's enormous. It might even be higher than that now. But I know it's...
How do you view that as a trader? You know, you look at the chart and then you see that, but you see the liquidity. So how does a trader interpret that?
That's why I always tell everybody, don't worry about the fundamentals. They mean nothing. You just worry about the technicals, the momentum, and the trend is up in NVIDIA. They're the hot player in the so-called AI. So when, AI is all the rage right now. It reminds me of the dot-com bubble. Everybody was putting a .com on the end of their name, back in the late 90s. And now everybody is attaching themselves to AI. So it's very, very similar. And ultimately, it'll lead to another big bubble like it always does. And, once that bubble pops, everybody will cry and scream. And, perhaps that's when the Fed will, cut interest rates. But, at the moment, they can't do it. And this is the thinnest leadership I can remember in quite a while.
What's your worst trade of the last 30 days since we last chatted?
Oh, it's KB Homes. I had to put option on KB Homes. It expired worthless on Friday. And, I had a couple of attempts to make money. I could have probably made 25% on a couple of occasions. And I just got greedy. I'm a little bit stubborn sometimes. I'll be the first to admit, because I always put in my mind a target that I believe is going to get hit. And that one, I had a couple chances to take it off the table with a gain. And I was stubborn. And the home builders have defied gravity, even despite the banking crisis, which I did not believe. I had really good technicals telling me that they were going to go down, and they went up. And the market's never wrong. Just I am wrong. So that was my worst trade so far.
Did your subscribers email you and say, "Hey, Nick, 25% gain here. You're going to trim"? Did anybody reach out to you?
Sometimes they do. Sometimes they do, but they generally will just wait for me to say, "Hey, let's pull it off the table here." It was I had the chance though. The chance was there. I just was looking for more, and believe it or not, that's sometimes where I just got it wrong. I don't know where the mistake really was made. I just think that the market believes that, hey, housing prices are gonna hold up, and these homes are gonna be sold. So I was wrong, and that's my worst trade. But again, I did it with an option. I do something with a swing trade. There's a lot more capital that goes into that swing trade. I do 10% of my account in every swing trade. Options, generally around 3-4%.
What about your best trade of the last month?
Believe it or not, best trade was today. I closed out a Pfizer call option for 62.5%. I should have held on another 20 minutes. I would have made over 100%. But I got in this trade last week on the 18th of May, and I closed it out today. So basically, 1.5 trading days, and made 62.5% on a Pfizer call option. Looks like some news came out where they got a weight loss drug that's hitting the market, and I could care less. If you can find the chart, you can make the money. And the chart was just picture perfect. Pfizer's gone from $60 to $36, and I bought it down there at $36, not knowing this news was going to happen. And that was my best option play, at least so far. And my other best swing trade this year was in natural gas. Had about a 8 or 9 day trade, and we made 32% on the second half. Obviously, I take a first half off, so the net, we were a little bit over 20%, and that was in about 8 trading days. But that was a swing trade, much more capital in that. But this Pfizer option was pretty good.
Are there any commodities trades that are looking good to you right now?
Yeah, I love natural gas. I still love natural gas right now. That's my favorite. I think that's putting in a major bottom.
Via call options, Nick? And how far out would you buy the call options?
I'd go out as far as you can. Go out as far as you can.
Like a 2-year leap?
Sure. Do a leap. Yes, do a leap. Depending on the vehicle you're going to use UNG or something. Just don't go so far to the money. $10, $12 strike would be good. But I love natural gas. I think natural gas is the next big mover. I love oil if it gets to 50. I think we talked about that on the program, and you could see how, everybody was looking for it to break out, and it's back down to the 70s, even went into the 60s. But if it gets to the $50 range, load up the boat. I love commodities longer term, copper and gold and silver, obviously, but they're not at the level. Silver will be probably my next play again. And, I did that play in September of last year, which was a home run. And I'll do that again. And I think I got the levels worked out where I want it to go to. But, gold and silver have been holding up pretty well because of the banking crisis. It's as a fear trade, right? It's a safety play. So hopefully, they'll see some more downside. And I think silver probably will be one of the next commodities to attack. But I'm going to just say this on your program right now. We are in, I think, the beginning, the very, very early stages, the conception stage, so to speak, of a commodity bull run in so many different commodities. And, some of them are going to go before others. Like oil, I don't think is ready yet. Like at 50, it'll be, when it gets to the $50 range, it will be ready. But nat gas looks like it's poised already, even though it's a down day today. You're going to see silver is already off the lows. Silver bottom is in, locked, sealed, and delivered. Gold has not made its bottom yet. So I'm still sticking to that, 1,500 handle for gold. It gets there, though, load up like you never loaded up before and expect new highs.
And in the meantime, avoid the miners from a trader's perspective.
No, some miners are going to be good right now. Like I like Newmont mining in the low 40s. It's getting very close. There's going to be several silver miners I like a lot before we might even get a silver bottom. Because remember, the miners should lead the metal.
But they're lagging.
Right, exactly. And a lot of people don't realize that. But when the miners lead the metal, that's like, woo, that's a forecasting sign. Right now, you're starting to see that shift happen in natural gas. A lot of these natural gas producers are starting to show leadership. So that tells you that natural gas, when it gets going, that thing is going to take off. But yeah, for the miners, there are several that are setting up, looking like good setups even right now.
What about your thoughts on the U.S. dollar, the Dixie?
Well, the dollar right now is hanging in there. And I don't expect the dollar to crash or crater right now like the public does. I think it's going to sustain itself for the next 3-4 years, but the dollar's done after that. It will lose its reserve currency status. And it's unfortunate, but I think it's a planned event. Got to be, because I've never seen such poor leadership in my lifetime, following politics and world governments and markets. I've never seen anything quite like this. It's almost like they want to destroy it. But it's still the best house on a bad block. But eventually that will turn in a few years, and the dollar will no longer be the world's reserve currency.
So, Nick, I just want to point out to listeners, you're able to separate businesses from trades. In that, like, for example, Pfizer, you mentioned you made some money on that. You're not a fan of Pfizer as a corporation, but
I despise it.
Exactly. But you have no problem making that trade. I mean, maybe talk a little bit about your philosophy regarding that, because I've asked you this about defense stocks before, where you and I, we're not fans of war and people slaughtering each other, but you buy and sell defense stocks at certain times.
I have to, this is my business, right? So I have to separate my personal feelings sometimes with where I see the opportunities. I try not to look at this business as taking it personal, or, right now we have this ESG movement going on, right? Environmental, social governance. And then they have this other CEI movement going on, where it's making all of these companies produce woke commercials. And even though I don't even think they really want to do it, it's against their better judgment, but they do it because they don't want the funding pulled from their equity. So, we're living in a very, very strange world where this stuff is happening. For me, I've always said, if I can help my membership base make money and there's an opportunity there, we're going to take the trade, whether it's something that I agree with my value system or not. If the trade is there, and that's why I look at everything as a chart and as a stock. Maybe I'm not right in this. I don't even know if it's a morally correct thing to do, but if there's an opportunity, I'm going to trade it, because you know what? Somebody could say, hey, Pfizer, I love that company. My nephew or my kid takes one of their drugs that really helps them, where I'm not a fan of drugs. So, I haven't taken an aspirin in 30 years. So I don't particularly care for anything that they make, but this is the way of the world. I have to make that money because this is the system we live in. We're not on the gold and silver standard yet.
That's right. Well, Nick, your website is inthemoneystocks.com. Perhaps as we conclude, you mentioned your worst and your best options trade of the last 30 days. How did your options portfolio perform the last 30 days?
I think we're up 175%. So
even with the home builders loss, you're still up. Yeah.
Yes. Without that, we would be doing a lot better. But yeah, even with that loss. So, I'm going to probably bat 7 or 8 out of 10. I'm going to try to not take those 100% losers, but when I see the opportunity there, I have to go for it, Bill. That's just the nature of trading. That particular name just didn't work out. And there'll be other losers this year. We're not going to win on, it's a first loss out of 10 or 11 trades or something. And even late last year, we had a big run where we went on, we had 1 or 2 losers out of 20 something or 30 trades in a row. So, it's going to happen. Don't ever think this is a humbling business. We're never going to be perfect. If you can't take losses in this business, you shouldn't be in this business because, it's just like the guy that owns the deli or a restaurant. He might order too much chicken and then I'll have to put it out for, have to raise a sale or something and say, hey, chicken's on sale because he has to move the product. It's going to expire worthless and he won't be able to sell it. So everybody, is going to incur a loss in the trading business. I know not millions, but thousands of professional traders, and there's nobody I know that bats 100%. It's just not heard of in this business. It's not going to happen. So, just be prepared. You're going to take some losses, but overall, if you have a sound methodology and use good money management in general, you should do pretty well.
Well, thanks for your insights on today's show, Nick, and I'll be talking to you next month.
Sounds good, Bill. Thank you for having me.